What's going on, everybody? Dan, is there a way for me to know who's on the stream? Oh, okay. Okay. Wonderful. Thank you. Thank you. All right. I'll be right with you guys. We're going to wait a couple minutes until more people trickle in. And I'm going to try my best to look at this, but I have another screen here so that it doesn't mirror. I am sharing my screen, right? As far as I can tell. There we go. All right. Message chat. Oh, there we go. Let me click on the live feed on X. Me watching myself. We got 46 people in here. Okay. All right. Well, that's 102. We'll wait 3 more minutes. Can I safely open this? That real quick. Oh, there we go. We got Perp Chad. Well, at least in the Twitter stream. Oh, it's been muted, I think. Okay, it sounds better. Okay. Alrighty. Good to know. Good to know. All right, Crusher left a little message, or in the live chat in X. I see that. I have another chat window over here. So I'm gonna do my best. But I'll just jump right in. This right here, this program is called ATAS. So it's ATAS. It's order flow software. It's considered L3 software. I'm just letting you guys know, for some reason you want to look it up first. There's a few different kinds, one being exocharts, another being Quant Tower, and this one being called ATAS. I will still start over here on TradingView because I do think TradingView is good. It has its use cases. There's lagging information. Oh, let me switch back over now so I can fix the feed. Okay, now we'll swap better. Okay, so this is TradingView right here, obviously. I am a big fan of a few indicators, and of the two that I've used, of the many that I've used, I've basically built two that I really, really like, and it basically covers all the bases. This one is by Lux Algo, so shout out Lux Algo. This is a free one. It's wonderful. I've used it for 4 years, going on 5 years. It's amazing. It has its nuances. It's great for kind of identifying mean reversions. And it's kind of what I look for in just about any chart. We could apply it to NASDAQ. I don't know why I got some lagging effect. Let me get out of that. There we go. Anyways, so I've often talked about quite a few times where whatever you see visually, even for the other software that I'll get back to at some point, most of this information you do not need. I guess that's the best way of putting it. It's very visual, so it works to some degree, and there are some significant levels or other things that are worth identifying. But for the most part, if you're going to consider any form of, I think a lot of people like to jump to bots and algorithmic trading, but there's a huge breakdown, or there's a lot that goes on before you get to that phase. And typically it's the data. So I call it the data pipeline. It's the data layer. It can be, obviously you're looking at historical data. Sometimes you're doing some sort of cross-referencing. Other times it's just a matter of seeing what's happening on the order books, really, which is where we'll segue into order flow eventually. So this, and here, I'll pull up a comparison. Alpha trend. I don't use them, but you guys can feel free to spend the $1,200 a year, whatever it costs. If I can find it, it should be right at the top. This one. Okay. Yep, it's this one. So a bunch of big guys, they've built this. It works quite well. It's very colorful. It's why I kind of built my own version. Originally inspired because somebody else had requested that I had build it. Let's see if they have a picture of it. Yeah, so a lot of people, they like to kind of follow this concept of dots, which is crazy. Dots and a track line or some sort of custom moving average line that varies in colors. It does work. There's a lot of big people that back it. It makes a lot of money. So feel free to use them. I do not use them. I built this one. If you want access to this one, you follow me on X and send me a message with your Telegram username. So everything you see here, we've got basically T is for top, R is for reversal. We'll go back to Bitcoin. It's just more volatile. Actually, man, I missed this Bitcoin move. You can basically have this on any time frame. Have these gold candles. This gold candles is when there's a huge discrepancy between these two moving averages. You'll also see that there is a color. So typically buying into a green trend does prove to work out quite well. I'm just looking at the messages. They're not coming through the chat for this restream, but it's okay. I see them on my phone. Anyways, these are not signals that you just blindly follow. And if you want to see how many alerts I have, well, how many logs I have, all of this gets logged to PostgreSQL, or for those of you that might not be aware of what I'm saying, SQL, Postgres, Supabase specifically. So my entire, one of my data pipelines, one of my feeds goes 24/7. And I don't do anything. It's all automated. If I need to add something new, I just add something new. And then it just goes. And then every now and then, probably once a week or every other week, I will take that data and then process it through some machine learning models, some machine learning scripts that I've written. Anyways, one of the best tools that I have learned, because I'm not the best analyst and I'm definitely not the best trader. There's plenty of other great people out there, and maybe a future stream, I am happy to give those people shout outs. This looks messy. Again, it's messy because I know what it is and I'm using it, but S just means short term. We have M for medium term, and we have L for longer term. Now, any of the VWAPs, those are anchored VWAPs. So short-term anchored VWAP, medium-term anchored VWAP, long-term anchored VWAP. The VAH, this is value area high. You have the point of control, and then you have VAL, value area low. Why can't I find it? So right here is fixed range volume profile. It is an excellent tool. I think everyone should use it. This white line right here, at least for this anchored point, for this anchored structure up, this is a point of control. It'll look a little different if I go on the 4 hour. Yeah, much, much, much different. You can keep backing it up. You can keep backing it up. You can outlay multiple ones. So this is on a larger time frame. Everything I have here with this indicator, it's typically for people that want the visual stuff. Everything I log here, all of these levels, they come through to me, and I typically just process that data myself. Also, all of these levels, they auto adjust. So you don't have to draw any of these. You don't need to fix them. They change them. The great thing about this is that anything you don't want, you can just turn off. You can turn off all of this stuff if you want. Doesn't really matter to me. When I tell people to use it, I say if it's useful, it's useful. If it's not useful to you, simply don't use it. Pretty much that's all you got to do. But the microstructure levels, the volume profile is amazing. And I recommend you use it. At the very least, use the fixed range volume profile. So that's that. There's this one. I'll show you this other one here. This is actually more for an options script and for somebody that specializes in trading options. So yeah, shout out to that person. They are an amazing trader. They're god tier. Let's take a look at this. It works better for stocks because it really focuses on session levels. We'll go to the 30-minute. It's a little bit cleaner. I've just spent a little more time polishing it up. But yeah, you got your session high, your open range high, your previous gap, previous day high. You got everything. After hours low. And everything here auto adjusts. So it's another thing. I think if you're going to use indicators, you definitely want something that's going to auto adjust and be quite helpful. This one in particular is a bit better for people that like to scalp. And again, all this data gets logged for me as well. So some of the stuff I have built, it's typically for people that want that front-end visual experience. But most of the time for me, I'm just focused on the back-end data and what's coming in. And then I like to process it, of course. And there's a time and place always. I think manual trades are always good. And even if you are doing some form of algorithmic trading, often you should have at least one person that is overseeing the operation. It's good to have like redundancies and risk measures in place so that it doesn't have to have like full human surveillance the whole time. But yeah, if that's kind of the place you're going, or you're trying to build and aspire to do that, I always say start with the data. Now, this one right here, this is called Addis. I can't highlight it, but it's free for crypto. You can access the indices or the futures, I should say, with like a 15-minute delay, but I do recommend it. It's free to download. I think it works on Mac and PC. I use PC for most of my development. I'm actually an Apple guy, but I just like PC now. The hardware is just more bang for your buck. I know the newer Mac models are getting better. Okay, so what you see right here is another template. So this is CVD, so cumulative volume delta. This bottom, I know it's a little laggy, guys, I'm sorry. This bottom area is dots will save. Dots will save. Dude, I have a guy. I got a couple guys. I know a couple guys. I think they trade a little too much money with dots and colors, but they do it and it works. And it's less stressful for them, so more power to them. Anyways, getting back here, this is essentially your open interest. And the reason why open interest and cumulative volume delta is important is because a lot of people, they get chopped up, and I'll go to a smaller time frame. A lot of people will look at the chart and sometimes you see green candles, right? And you think it's going up, which is great. But there's a huge difference between new buyers entering. So you actually have an increase of buys and buyers versus, so you have a short squeeze, which is probably what happened a little bit last night. And then I would also assume today with New York Open and as Bitcoin's pushed back up to 80. When people get squeezed, right, they're actually forced to close their trades. So there's a huge difference between people closing their trades versus new buyers or new sellers that are opening the trades. And that's where order flow software comes in to use. Some people like to read the tape. They like to look at the L2 on some of their brokerage platforms. I know some people are just excellent at that. I do think it's better to have some sort of visual cue, and I can basically, I might have to go to bigger candles, just fine. But same thing here, you see some volume profile, you see some general levels marked out, and you can kind of see, in this case, open interest increased, and then all of a sudden it decreased. But while price increased a lot higher and open interest increased, price didn't fully decrease a lot, at least not initially, not right away, but open interest did. So what that meant likely in this candle right here is a lot of people closed their trades, and it could be both sides. But in this case, there was net negative delta. So sellers, whether they were new sellers or buyers that closed, yeah, there was a huge decrease. And a close and open interest can be healthy for charts, of course. So let me just go to another time frame because I want to look back at the 4 hour. So this is kind of my routine, by the way. Maybe I should backtrack. This is always my routine to look at stuff. I'm just using Bitcoin. Obviously, it's relevant, but I'd say the right thing to do typically is have a good routine. Have a good routine, look at stuff. I think in Q1, I think I made 6 trades. It was the least trades I ever made in Q1, and I don't regret it. I don't care, because the worst thing you can do is force a trade. And I'm a big fan of, I'd rather wait. I will happily wait for a trade to come to me than anything else. So for example, here for Bitcoin, just to make it easy again, was actually, I kind of meant to long. I was preoccupied this morning. But I either want to see it back up above, bounce a little bit and go higher, or we'll just see if we dip down and reject. And then that would be how I would plan a trade. I don't need to be in a trade. There's no reason to always need to be in a trade. So yeah, that's kind of, I like confirmation. And sometimes when you have these very significant levels, it's great to kind of watch for this confirmation. So we have a timed point of control right here, kind of already wicked. But you know how Bitcoin is, it's choppy. So it's like, why would I long? Why would I long at the top of the range? There's really no reason to long right now. And I'm not good enough, nor are most people good enough to say, well, this is either a great place to long or a great place to short. The thing is, we just don't know. We really, really just don't know. If you're buying spot or you're doing something else, then I guess you're probably okay. But if you're going to trade with any amount of leverage or margin, sometimes you're better off just waiting. So this would be a level that I would be waiting for just to come back down here. But otherwise than that, for me, there's really no trade on. There's no trade on Bitcoin for me at the moment. Okay, so that was enough on that. I could talk about Bitcoin forever. Let's go through a bunch of other stuff that's basically been here and that's been booming. Excuse my labels, they're not all perfect. They're just things that I look at. This is what's been on my top watch list. And honestly, to my regret, I didn't buy enough of any of these things because I've been watching it for like 9 months. And then they just kept going and going and going. And sometimes you waited for a pullback. And the pullback you get is very different. So this sort of dip, you don't really get too many big dips, but like that's stocks for you. So everyone's kind of been on, I'd say it's funny, I just saw this come onto my feed the last probably week or two, maybe 3 weeks. Everyone's been focused on any of the components, grid infrastructure, AI infrastructure, photonics, whatever, right? XYZ, AI bottleneck, hardware bottleneck, whatever it could be, right? And there's a great reason for that. And it's honestly because we're going through like a huge boom and demand doesn't seem to be slowing down. Under normal circumstances, and I think this is where crypto has kind of jaded some people or confused people for regular equities. One, crypto and like financial technology, fintech, there's only so much innovation that can happen. And it's served, I don't know, 15, 16 years, whatever, 17 years. We've gotten a lot of innovation. More things will come from that. But when you think in terms of what is an actual innovative next generation technology or where all of these things converge, obviously AI. If it was just like a fun thing with NFTs and we were all trying experimental decentralized finance and other sort of financial instruments, like great, right? You're going to have your boom and your bust. One of the conversations I have with people a lot, and because we don't know where the top will be, we don't know where anything is going to slow down. And in terms of AI, you've got this sort of renaissance of people in art and entertainment, coding, engineering. You've got industrial things happening. You've got military things happening. You've got cybersecurity, which goes back to military and government. So there's no way of understanding how this will slow down because, when you actually think of the Industrial Revolution, or they talk about this being like whatever, the fourth industrial revolution, this is industrial. This is as industrial as it gets. It's a lot of hard assets. And we literally depend on all of this manufacturing and a lot of rare earth materials, minerals, other things that need to be processed and refined. So the master list of where this goes, and there's plenty of other things that you could buy into or jump into, and they all have their different plays and different moves. I don't know where the top is for any of this. So all I can say is I'm very, very bullish still. Unfortunately, everything's at an all-time high. We'll see if some other, news event comes out. But anytime a great news event has come out, or when I say great news event, I guess I mean crisis, it's basically been a buy the dip. Buy the dip. Why if you buy the dip? Because it seems like the government and cash and interest rates and everything else, it doesn't seem like we can stop. I think the party will stop at some point. But as of right now, the party hasn't stopped. So that's basically my rant on the market and what I've kind of looked at. The indices are kind of the driver that I pay attention to. And sometimes no trade is a trade, basically. So unless you want to be positioned, I think it's a tough market to just like size up to if you're already not positioned. So this is kind of what I'm looking at. This is kind of what I've going through a bunch of the time. I'm going to pivot to something else, and Dan's got the sense of humor of saying like, what does a quant? What does a quant do? Or, XYZ, what's going on, and he's funny for that. But the question isn't like a straightforward question, totally. But when it comes to research, that's what everyone's looking for. They're looking for alpha, right? And I know this is really tiny, so I will try my best. Actually, I can squeeze some of this. So this right here is a custom. This is not a dashboard. Do not say it is a dashboard, please. I mean, technically it is, but this is a ranking system. This has got about, I don't know, 8 or 9 different data endpoints, API endpoints. This one is more of an objective framework, and I know I've talked a lot about stocks, and this one kind of focuses a little bit more on like small caps or whatever, as well as looking at big winners or big gainers for the day. And the thing with something like this is it's really easy to look at a company and say, oh, that company does not look good. That company does not look great. The worst thing though is sometimes these signals or sometimes big events mark the bottom, right? So you always kind of need like your drivers and you need your counter thesis. So what this thing does right here essentially is we get a rank of all the top gainers, all the top losers, some things with high volume. And I mean, I can custom pull in some stuff if I wanted to as well. But for stocks, especially for this era of AI or whatever people are looking to trade, you do need to consider the fundamentals of the business, the health of the company. And sometimes it's just, you're kind of in the middle. You really don't know. So I needed to build something for somebody that was going to help them make that decision and make that decision very quickly, or at least have information all in one place. And this, you can see all this information here. I can actually show you this script. I think you guys will appreciate the bare bones terminal of this running, but I'd have to pop up another terminal. I just don't feel like doing that. So now we're just starting. I'm a little late for activating this, but you'll see in a sec. And some of these things aren't even going to come through. They're low liquidity, and I'm not fully connected to the L2 on this. But anyways, yeah, so we have like a trade rating, and obviously if it's red, it's a recommended short. Just because it's a recommended short doesn't mean you should take the short. No signal, again, nothing ever means that just because it says something, that doesn't mean you take it. It's just kind of your baseline of where you can start. And it especially means a thing for winners, right? Because when you see some of these daily gainers, I mean, anything that's rebranded to AI or puts out a press release on AI, that basically stocks in the AI sector or any of these adjacent sectors, it's never felt like more like crypto than ever before. Like a headline, a political thing, whatever. I've never seen a more volatile environment, even for some of those big caps, multi-billions of dollars of market cap, and then they swing like 10 or 20% sometimes in like a day. It's crazy. I'm just checking the chat here. So yeah, so this is great. Actually, that's not going to have a chart here. What is this? I've been watching this one for quite a while. Let me make sure that is on the CBD. So yeah, I've got stuff here just out of convenience. You can look at a chart. You can see how stuff's doing. This has been a choppy stock, a very, very choppy stock. And sometimes you want to buy into the winner, and sometimes you're right. But then by the time you buy into the winner, you're too late. You're too late. That's a 30% pullback, which is crazy. Obviously, if you got in earlier, you'd be making a killing. So that's just kind of one example. And here, I have a little thing right here. Let's see how this works if it doesn't give me a caching issue. It did. And shout out to the Smith. The Smith is the one that pointed me for some of these little add-ons. So you're the GOAT for that. Very, very smart, super, super helpful tool. Obviously, you can go to Yahoo Finance as well and look at this. But the great thing about having this is that it's all consolidated in one place. So if I need to go to Yahoo, if there's relevant news, I'll pull it. I can kind of get an idea of market cap, some of the lightweight fundamentals. All of this information, by the way, this is the front end of all of the data. All the data that I have, it gets put in a CSV. Everything I do, I don't even build CSVs. I write Python code to do the CSV, to make the CSV for me, basically, because I need to process that much information. And as long as the columns, as long as all the data is stable, sometimes you're going to be missing information. Sometimes it's just some random stock or whatever, acquisition company, SPAC, something weird, right? But everything you see here, basically, this actually came from a spreadsheet. And every time I run a new scan, you can see right here in this corner, it updates me and I store all that information. This just makes it easy to look at because nobody wants to look at a spreadsheet. I don't want to look at a spreadsheet. If I need to look at a spreadsheet, I write another script to process that spreadsheet. Here, let's open this up and see how this is going. If it's running. Oh, I didn't start it. That's too bad. This is kind of like another CVD tool, very lightweight. I have to do some upgrades to it. But you know, majors that have options or futures, or you know, something like crypto with open interest, perps, you're going to see that here. But if you're going to track something that's a little bit less liquid, then you might need something that's a little bit more customizable as far as tracking new buyers, new sellers, or previous buyers and sellers selling. This is also another very clean script. It just makes it look good, but typically I'm like a terminal guy. I like to just see stuff in the terminal. Everything looks beautiful in the terminal. You don't have to overcomplicate it. And yeah, I got this colored. It's, you know, for anybody that needs some colors or whatever. There's a little Terminal Pro. So this is another part of like sort of my daily routine. And I'm always improving this. And the best thing you can do with any of this is you got to check yourself. There's no software. Can you throw information in an AI and have it process it? Sure. It does a good job. It does a good job when your data is clean or when your data is organized. It does not do the best job when you say, hey, go source me raw information. So that's kind of the big difference here is, sorry, I was wondering where my keys were. The raw information. Yeah. So if you have something organized, if you have something tabular, so again, like a Supabase, like a, you know, something in SQL, SQLite, whatever you want to call it, right? There's a few different versions. That will make your AI, that will make whatever sort of analysis you do a lot easier. And that's what this is. This is kind of the end product that makes some of that analysis a lot easier. I do have a machine learning report to go over here at some point with you guys, but I do want to jump to this. Now, I haven't done a lot on dated options as far as updating the flow. I did publish this back in the general scanner back in February. That's on a GitHub. That's for everyone because I know a lot of people have struggled sometimes with the Python SDK, with Paradox Python SDK, and it makes it great to use it because it's all containerized and basically right out of the box in 15 minutes, maybe 45 to an hour, right? If you run into some tiny hiccups, but for the most part, you are good. So if you're in need of something like that, I recommend you do that. What's going on here? Oh, let's plug in. What the hell is going on? Options WS. Also, I'm just spelling things incorrectly, of course. This looks like what happened. Yeah, so here, I'll minimize this for a sec. So this one right here is basically, and I haven't done this, so I just whipped this together this morning. The other one's been around for a while, but I was like, hey, I should connect and start pulling all this data. I just haven't had time because stocks have been the focus. But options are elite. Everyone should trade Bitcoin options. And obviously I love Paradox for that. And, you know, it's just a great product to trade. It's any options, whether stocks or crypto, Bitcoin, whatever, right? It's an extremely difficult instrument to trade, but if you can learn this and you can understand options, like the sky is your limit. The world is your oyster, basically. And I guess that's really all I can say is that it's worth it. So check them out and look at it. and learn about it. This will get more expanded. I don't have any of the Greeks right now. Obviously, anybody that either bought calls or sold puts, you're doing quite well, I'm sure. Assuming you did that a couple days ago or yesterday or whatever, last week. But yeah, this is really the new frontier because everyone's got perps, to be honest. And there's a lot of unique hedging. So that was kind of my background, was doing high frequency trading. This was going back to the BitMEX days. So I was watching Arthur Hayes teach us about what's a Bitcoin perp, right? Which is basically a futures contract in terms of traditional finance, a futures contract that never expires, because normal options, normal futures, they have an expiration date. So he created this beautiful, beautiful perpetual swap, and it never expired. So you could basically hold it to forever, or, hold it infinitely. And obviously that allowed leverage in, and then that kind of did a lot of other stuff to the industry. But basically where we are now with what we have on Paradox, earlier last year, they introduced the perp option, which was what caught my interest. And that's how I knew the team was elite. But either way, the industry is still used to dated. And there's basically no better opportunity than, I'd say, trading Bitcoin options. It's extremely volatile. So I always recommend a means of hedging. You can do things that are called synthetic hedging. In this case, the easiest would be to long or short a Bitcoin perp and then buy or sell a call or put. And that allows for some sort of dynamic hedging or some sort of asymmetric hedging, asymmetric insurance, right? You might be able to time some things. So again, if you want the new frontier, if you want really where there's like new alpha, so you're not having to pinch, because I was hedging and doing high frequency trading between OneFox, which doesn't exist, Deribit, BitMEX, Bybit, Binance, whatever else. I can't even, that's probably a majority of the big ones. And those margins and those spreads were unbelievable, and we'll never get them again. We're never going to get them again. But the alpha now is, when I say alpha, I mean the actual like financial alpha, right? Actually, where is their market alpha? Inefficient markets. Where is there a chance to take advantage of, say, like some of these spreads, right? You got to pick and choose some of these spreads. But doing stuff like that, engaging in some sort of hedging activity, you do it here. You can actually do it all on Paradox. You don't even have to do multi-exchange, which is great, because again, you've got so many strike prices and you've got their Bitcoin perp as well. And that's where I would recommend building an algorithm. But the first 3 layers, or the first 2 layers before you get to that algorithmic layer, before you get to the execution layer, is the data, and then the logic, the trade logic, the math logic, whatever else in between, right? A risk system. My most important thing on Paradox last year was my risk system. It was a risk algorithm, actually. And that was like my most trustworthy thing. It basically removed me as a human. And that's kind of what made it amazing. So yeah. We can always talk more about options. Happy to. This one, again, this is already accessible on GitHub, but this kind of just shows you the top sort of absolute funding. So if you're looking to farm funding rates, again, another great thing, and this is actually where you can hedge off of exchanges, where you look for, say we got something here quite high, OP and ARB, right? Those are pretty high funding rates. So I don't know what it is like on other exchanges or on other dexes. It could be centralized or it could be decentralized. You can do sex to dex hedging. You could do multi-exchange hedging. You could do, 3-4, whatever, right? There's a lot of things out there to do. But this one just helps summarize it for me, so I can kind of just see the information and I can kind of see where is the highest funding rate. So super simple, but very useful. I know a lot of people like to ARB and fund funding rates. So that would be my recommendation. This is already published. You can go find it somewhere. It's on my X account. My X account is CISSORA, although I go by Scissor. And on Telegram, somebody owns Scissor on X. So if you know how to get a hold of them and I can buy it off of them, wonderful. But otherwise, I'm Scissora on X, or that is my handle. So you can already find this, but if you need help, you can scroll through my page and or whatever, DM me. I'm pretty responsive most of the time. Give me 1 sec. Talking for 40 minutes. Talking for 40 minutes. Kind of flew by, but that makes your throat dry. Okay. I'm just trying to make sure I didn't miss any messages, but it doesn't look like it. So this is for you, Dan. Well, everything's been for you. You know, what does a quant do? I think I shared this with you recently. Yeah, a couple weeks ago or whenever. So this was something I did for somebody. This was basically looking at call volume increase. Not on all things across the board, but yeah, definitely when there was an unusual call volume increase. The idea was that this was making sure I'm not muted. This was a bullish signal. And so I was like, all right, you know, and somebody gave me all this data. Hey, can you do this for me? Can you help me out? Blah, blah, blah. Oh, here's my little, here's my handle. You can find me somewhere. You can find me. Like, this should be bullish. That's kind of what, you know, it's kind of how it's labeled basically in this, I would say expensive news source. Honestly, very expensive. Kind of ridiculous how much people spend sometimes for traditional finance. So I was like, okay, sure. Like, give me a data set. Like, let's look at the sample, blah, blah, blah. And went through all this. Yeah, had a bunch of stuff probably over, I want to say 4 or 5 months. And then at first it was a simple, so I know I keep saying your name, Dan. This goes for anybody, but I just want to really catch your attention on this. So sometimes the process of doing like quantitative research, right, is you don't know what the hell you're looking for. You have no idea, right? You get all this noise, you have all this data, or you have something, you say, I think there's something in here that we can learn, deduct, extract out of, maybe make a decision based off of. And that's all you got, right? You got a hunch. It becomes like an investigation. So in that case, you basically have to go and say, okay, what happened at this time and period? So this is where like a historical snapshot or where a sample of historical data comes from. In this case, there was, 617 unusual option signals, basically. This was all calls. We didn't even look at the put side. So all calls, huge increase, basically a big demand for these calls. Great. So we said, well, what happens to the price after? And as you can see up here, I've just got 48-hour, 14-day, and 28-day. That's not how it started. At first, I was like, well, let's look at what happens in the first 5-15 minutes, right after. 30 minutes, 1 hour, 2 hour, 4 hour, blah, 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 12 hour, 24 hour, 48 hour. Okay, great. You get some results. We saw that. You know what? Let me see if I can pull up that spreadsheet so you guys can really see it. Okay, as long as this doesn't interrupt. I'm going to keep talking while I find it for you. So we had all this future data just over like the course of the day. And I was like, well, that's great. Here's kind of what happened. Not really enough though, right? So then I'm like, okay, let's find something else. Let's pick something else. And then I was like, well, I'm wondering what happened to it 30 minutes or an hour before, or 2 hours before. Actually, what happened to it a day before, 2 days, 7 days before, right? Were there any signals that actually came in that allowed, that kind of foreshadowed why there was even a call volume expansion in the first place? So that gives you some good information then. So again, another great place to start. And then I'm just getting this link. Rest assured, it's fine. Okay, I'll pull that up in a sec. So anyways, well, you know what, screw it. We'll just start right here, I guess. So you want to say, okay, how does this data look? Yeah, updated week prior, right? Look at all this data. Who wants to look at this stuff? I don't think anybody wants to look at this stuff. I think this one's even bigger. Merged and metrics. Yeah, this one's the biggest one. Like, look at all that. first off, nobody wants to build this. I didn't build this. I mean, I did, but I built it with, with Python scripts. But I had to source all the data, and then I had to, kind of codify things so that it got placed in an orderly process. And this is what it first started off as, right? Very simple. Here's what we got, right? Ticker, date, time, blah, blah, blah. I didn't even care about the headline. And then, okay, let's kind of see what was going on a week prior. Let's see like some of these changes. Great, right? Quite simple. And at first, this information doesn't come in as easily as you might think, right? Because you really got to think through it. It's not available there. It's out there in the ether. It's out there, whatever, in the matrix. So you have to source it. And then all of a sudden, it kind of comes to fruition. So this is kind of that process of where it's like, if you're going to do this sort of work, right? Most people don't want to look at this. I don't want to look at this, but I know how to build it. I know how to source it. And then I know how to put it into something like this. And this was a prior one too. And I didn't do this. This is just a simple long-term report. And a lot more basic, was just kind of looking at the long tail, short tail. So we've got all these calls. Basically, it was a third. So think of a bell curve, right? We basically had a third of those call volume, those unusual call volume signals or whatever that came in. A third of those, you were actually better off shorting. A third of those, you actually could have accurate longed. And the other third was basically null. Like it moved a little bit, but nothing significantly. And that's kind of where this long tail, short tail comes in. Great. So then we start looking at the windows. Then let's start looking at time horizons. Then we start seeing, okay, how does it look over the longer term, the shorter term, the sectors, right? Is there something going on with the specific sector? Are there certain things that we should be avoiding? Because just because it works in one sector doesn't mean I need to be doing the same thing elsewhere. And these were just really significant longs. One of the things we discovered was that basically you could, if you were going to long or if you were going to use this as a signal, you needed to hold for a shorter period of time. So 14 days was kind of better, maybe even 21, but you really didn't want to go into the long run for a full month. But then as you got into the weaker ones, the shorts, you could actually more confidently go with the short. Great. So then we said, okay, what confluence, what synchronicities, what sort of signals are going on, or signals, what sort of variables of these companies do we short, right? Well, sometimes, most of the time, it was easy to say, hey, this company is weak fundamentally. It's actually still trending under its 200 MA, 50 MA as well from time to time. And yeah, so basically, if you identified a weaker company, lower expected growth, which meant fewer analyst coverage as well, and just in general, investor expectations of growth in revenue, profit margins, whatever, EBITDA, you could probably short. And if I had to go through all of this, which originally was supposed to be recommended as this is a bullish signal or seeing these call volume expansions, it gave me a lot more clarity and gave me a lot more confidence that I would rather short, and I would rather identify weak companies and short. So that's what it took though, but it took a lot of data and a lot of time. And then I said, okay, we've got all this data, like that few spreadsheets I had, kind of one master spreadsheet eventually. And we say, okay, let's go back and forward in time and let's look at all the price action. Let's look at all the fundamentals. Let's look at the historical snapshot at said time or said date of that ticker, and what was going on. And let's try and find, what was the most significant. And that's where you get something like this then. And then you get the most sort of consolidated sort of quantitative report, right? And this is where, even then, this is a lot of information. If I gave this to some people, most people would say, well, I'm not going to read this. I don't want to understand this. Let me just throw this into my LLM. And to be honest, if you gave me this, I'd probably do the same thing. I totally understand. I would not be offended. So here's some of the sort of sector breakdown just for the 48 hours. And then 14 days. And then do I have 28? Yeah, I have 28. So Yeah, for longs, 52-week position, the 50 MA was actually a bit more significant, as well as the 200. And then the 50 and the week prior, or the dollar week prior as well. So price of the week prior, and that change in price. Because often you'd see these gains be given back as well. And that's what you see with a lot. And that goes full circle to this, right? A lot of the time you see some gains. You see it with that. I mean, when BitTensor was going, dude, I was laughing. I've been in crypto long enough, right? So where is it? It's recovered since a bit, but every time people were saying stuff after it went on for like a week or two, probably about week 2 of it just pumping, I was just shorting. I'd short every pump close. It was more of a scalp. And people just be like, what are you doing? This is the future. What are you talking about? Same thing for Algorand, right? One little report from, what was it, Google? I forget who quoted it. Something about Algorand and blah, blah, blah. Yeah. And people like, oh, it's going forever. We're at 12 cents. We're going to 30, a dollar soon enough. You know what I mean? Short, sell, basically. It's ranging. Maybe this will go higher. I don't know. And that's why often it's just easier to short as of lately in this market regime that we're in. If it's a very good company, you see something that has incredible strength. You do. Light. Oh my gosh. God tier trade. Amazing. Literally. All you had to do is buy and hold. And obviously then it came and it fit the narrative. So, and shout out to my one buddy that caught onto this stuff, all of this, like a year ago, right? Just gave me like the grandmaster plan of what to buy and do nothing. So shout out to him. But for the most part, when you see big pumps, yeah, it's just easier to sell, basically. And if you do see a strong company and it's worth buying into, it's better to wait for it to kind of correct or have a mean reversion and go about that. So I think I have a summary down here, right? Yeah, here's the summary. You guys can read it. I can zoom in a bit. Or don't read it. It's kind of fine. But that's what goes into quantitative research and development. It's some of that stuff. And that's basically how a day for me would go. Now, I give you guys a bit more visual stuff, right? Typically, I don't really need to look at the scanner. It is just best to go to the UI, go to Paradox UI. You can just go down. You can just look at the funding rates. You can go learn in options, what the options dashboard looks like. That's very easy. But really what this would be, this is like the starting foundational layer for saying, okay, I got this information. I think I want to start making these kind of trades, right? This is what I'm looking for. I think if I trade like this, I can have a very systematic approach because you want something that you can repeatedly do over and over and over. And if you can do that and you can kind of control your risk, and you really shouldn't touch leverage for most people. That's just the truth. I mean, 5x, to be honest, that's really what it is. If I'm trading with size also like 3x, 5x for crypto, right? But yeah, I don't recommend moon plays. Anything you see on Twitter, it's whatever. Most of it's a lie, to be honest. But with something foundational like this and with AI, you can basically do anything you want. Like here, we'll just see. We'll just see. Let me just copy this. Right? Oh, it refreshes a little too fast because I've had it 3 seconds. Okay. I'll try and zoom in so you guys can see this a bit better. So here's a simple question, right? What can you tell me about this? Typically I use Codex for actual coding, but for the sake of seeing some stuff in action like this, we're just gonna see what it says. I just said, what can you tell me about this? I do not do perfect spelling. Actually, most of the time I talk. So I talk to my AI or I use another audio recording and then I paste it in here because that's how you're gonna get your thoughts out. So if you are new to doing anything like this or programming or whatever, or trying to vibe code or whatever, I'd say most people would call it machine assisted programming because that's really what it is. There's no such thing as one-shotting. I mean, kind of, right? When you have the right sort of foundation, you can one-shot like an upgrade. You can one-shot like a new file. But it's very hard to just say, oh, connect me to Paradox API, boom, make a spreadsheet, log, feed the data, let's do machine learning, yada, 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 start submitting trades. Like you should plan. Planning is always good. It's always, always, always good. And then obviously LLMs are great at assessing information. So this just gave me some basic stuff. Some of the data came in. I mean, I just took a random snapshot, so I didn't get all of it. So, okay. Let's say if I was to do an option strategy, and my keyboard is actually a gaming keyboard, so it's just so sensitive. What should I do? You know, how can I hedge? How can I execute trades on Paradox? I'll just have a conversation. Sometimes if you haven't primed or your AI doesn't know you well enough, it'll just start jumping into coding. Don't let it. Stop it. Please stop it. Like, honestly, don't allow it. Because you want to have a conversation and you want to plan with it. Oh, and I have this in a container, so this is probably going to be really weird. We'll see what it says. But you should plan, plan, plan. Always plan. The better you plan, the more you plan, the more productive your code will be, basically. So, and obviously here I'm just playing with it, so I don't even know what it's going to tell me. But I'm a big fan of hedging. So if there's any takeaway, hedge, 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 risk, 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 risk management. That's what I would say. Try to go long and short. Try to buy a call and buy a put. Try to sell a call and sell a put. Try to do everything at once. Try to buy some calls, buy some puts, sell some calls, sell some puts, right? Try to focus on your delta. I'd say the best place to start with options is delta. So, I mean, all of the options are actually all of the Greeks are extremely important. I don't even know what it's doing. I didn't even tell it to do this. That's fine. It's just giving me examples. Okay, yeah, for spread batch order. May 5th, 81. Okay, yep. Okay. I say, okay, well, let's do an iron condor strat. You know, make me a new file, iron. We're just gonna go iron.py, right? Iron.py. It's not this easy because it's gonna need a lot more information and a lot more math. But this is a way of kind of, you know, priming it, getting it sorted. I just wanted to kind of give you guys an example. Very lightweight. At some point, this will pop up. Dry run, options WS, blah, blah, blah. Yes, yes, yes. So, yeah, I mean, all I can say is study, study, study. The trend is your friend for anything. The levels are your friends. You don't even need something complicated. You can literally draw levels, right? I'm just being messy about it, but you know what I mean? I'm a big fan of horizontal stuff, by the way. I'm not really a big fan of channels. And I think that's another secret thing that I've been taught from some really good people. Just focus on horizontals. Trade the range, right? Trade the range. Don't overcomplicate things. Yeah, sometimes you get a parallel channel and flags and other things. I don't focus on that stuff. Level to level. Level to level. This is daily, right? We can mark out stuff. We could just focus on the 2 hour, right? We can just do that. Boom. There are horizontal levels. I'm just making this more difficult than it needs to be. Yeah. Support resistance, support resistance. Something like that. That's basically it. Kind of hitting an hour. And I did not think my voice would get so raw, but it did. That's crazy. I can tell you that's not enough lines probably, but it's all right. Oh yeah, I have subkey compliant, very good. Security is always important. Yeah, who knows, right? Who knows? But this would be a hedge strategy, basically, right? To take a mix of stuff. And see, it's kind of laying me something out right here. Look at that. So that's basically everything I use. My AI is my best friend for this sort of work. Even screenshots of stuff like this does work. A database, I didn't dive into that aside from kind of showing you some of the basic logging, but yeah, a database can be important. And at the very least though, a stable feed is quite important. So that would be my best summary of kind of how I start. TradingView is great. I use it, I look at it, it's wonderful, it does the job. When I need something more intense or I'm planning a trade, I might use some L3 order flow software. I might want to look at open interest. I might want to try and identify net delta, cumulative volume delta. Are we having new buyers coming in? Are we having new sellers? Did bears or bulls win that candle, right? Who was dominating that? Is there open interest decreasing? Are positions closing? Is open interest increasing? Are new positions opening? So in this case, price increased and open interest increased. Doesn't always do that, but in that case it did. That's just one little example. And time and practice is where it gets you. Time and practice is where it always gets you. That's all I can say here. Yeah, this, some liquid stuff here. This is a great thing. I mean, you know, just for a signal thing. I think I should be able to get BTC. And also get IBIT. Just do a quick little run here. Get me some new information. And you don't need all of this. Nobody needs all of this. It's just everything snowballs. Snowballs, snowballs, snowballs. And then your entire system becomes easier to work with. So there you go. We got them. We got them. Oh, there's Grayscale, Bitcoin, BTC. Let's look at the chart. Like that, you know, something pretty cool. So look at their company profile. Let's see what's going on here. That's about it. So take your time, don't force a trade. That's all I can basically say. So I think we are basically good to wrap it up. I've been paying attention to the chat, and I don't think there were any questions, really. I mean, aside from Fiddy asking if the data can save him. And I mean, I think he knows the answer to that. So, and you know, sometimes it's better to just hodl. Sometimes it's better to be an investor, right? Invest and hold, and don't be a trader. Not everyone has to be a trader. There's nothing wrong with that. Investing and holding wins most of the time, to be honest. It is. If you can handle the stress, or you can handle the sort of, oh, I forgot about this. This is a scatter plot. It looks like a regression chart. It's basically a risk profile of fundamentally strong companies and fundamentally weak companies. And then the yellow is unknown. The larger the dot, the higher the confidence score, basically. Super, super cool tool. Yeah, I can click on anything and just change it here. Super, super cool. But start small and then kind of snowball from there. And don't force trades, basically. Okay, I think that's it for me. I don't think there's any questions. I don't know if Dan's still there. I think Dan's on the other line. I have no idea. Or he has control somewhere. Oh, okay. Yep. I mean, that's it for me. So I'm good. I don't know. Do I just hit an off button, or you want me to just stay here and chill for a sec? I'd like to make this a once a week thing, and then yeah, we'll talk soon, and probably plan to do this next week again, same time. So, thanks. Bye.